Everybody, it's Kevin Wadsworth from NorthStarBadCharts.com, and we're taking a look at the gold chart at the moment to try and see where we might be heading. This is a chart that goes back to 1970 or thereabouts and follows the gold bull market through the 1970s, and then the long, painful for precious metals investors sort of falls and corrections that lasted a couple of decades, all the way through until around about the year 2000, 2001, where the gold bull market took gold up by several 100%, 800 to 900%, from a low of about 250 to a high of over 2,000. And then the 10-year perfect geometric arc or cup and handle pattern, which has formed since then. So a couple of things to notice on the chart. The handle has broken out and price is moving up. What's going to happen here is either the price is going to come back down and test the breakout and then move up, or it could completely fail and fall down below the 12-month moving average, which is currently around about the $1,800 level. If that $1,800 level fails, then it's probably going to come down and test the 3-year moving average at currently 1686, I think it is there. So that's the downside to watch. And I suppose something else to say about this rising expanding wedge with the solid red lines here. There's only 2 touch points on the top and 2 touch points on the bottom, so it doesn't actually prove anything because it can join any 2 points with a line. So it hasn't proved itself as a support or resistance line yet. The price would need to test those lines again and have some kind of reaction at those lines to prove that they're valid and relevant. The lower support line I'm less convinced about, but the upper line I strongly suspect that if and when we hit it in the future, it will provide resistance to the price going up. So the downside I've just mentioned there and what we need to look for. The upside, if we break above the area around 1975, 1980, then that's going to turn that line, the previous all-time high, into a support line rather than a resistance line. And so we'll find support at that level going forwards if that's broken to the upside on a monthly closing basis. If that does happen and we get above it on a monthly closing basis, then technical analysis that I've done, this chart and others, suggest a price target somewhere between perhaps $2,300 and $2,500. The height of this flagpole, if you view it as a flagpole, it's around about $1,200 to $2,000, so it's about $800 high. If you add $800 to the breakout level around 1,800, that takes you up to about $2,600 or so, actually. So anywhere in that $2,300 to $2,600 range, the mid 2000s would be the target area. This red block I've put on the right hand side here, that's meant to highlight the 8-year cycle low in 2024. So my sort of view at the moment is that the most likely scenario is a move to the upside over the next 18 months or so, whether we do it now or whether we do it later this year. Move to the upside, and then we come down and test this support level from above during that 8-year cycle low in 2024 before moving much higher. So that's my main sort of expectation, but any sort of downside break of the 1,800 level would certainly be significant and would potentially change my view. The alternative scenario being that we just track down into the 8-year cycle low without going any higher than roughly where we are at the moment, or at least not without breaking the previous all-time high. So it all hinges really, I suppose, what I'm saying is on breaking that all-time high on a monthly closing basis. 1975, 1980 is pretty key. And we can look at some of the technical indicators, and in fact the rate of change is often an interesting one because it indicates sort of long-term shifts of investor sentiment. I'm going to put the 84-month rate of change. That's the 7-year rate of change, and it works particularly well with the gold chart, and it shows, if I just get the gold chart up there for you, there we go. It shows how the rate of change, once it started lifting away from the 0 line, was indicative of the developing gold bull market. You can actually do technical analysis on the rate of change as well, and if you zoom right in at the rate of change indicator at the moment, you can look at the breakout levels on this indicator. So you've got a very clear breakout level there. I'm just going to balance it on that previous high there. So if the rate of change breaks above there, then it's likely going up to this next level here, where you're going to find, I'll just draw it in for you, you're going to find resistance, which then it may hesitate there and then break through that level. But it's going to take quite a long time for the rate of change to get up there. It's probably going to take at least a year, unless it does a complete reverse symmetry move like it did here, which case it'll just take a few months, which I suppose is possible given current circumstances. So I'll be looking at the rate of change indicator very closely as well. As I say, you can check back in the past and see where that type of technical analysis has proven worthwhile in the past, and you get sort of key breakout and breakdown levels. I'm just looking on the chart here to find one for you. So there's one here, for example, where the rate of change broke out, back tested, and then continued to rise further. So you can do exactly the same technical analysis on the technical indicators that you can on the actual price chart itself, and it just adds an extra weight of evidence. You know, no single piece of evidence is enough to draw a conclusion, but when you look at enough of them and they're all sort of pointing in a similar direction, telling you a similar thing, then you can make some solid investment decisions. So if that rate of change indicator breaks out, combined with a move above the 1975-1980 level, then it's telling me that we're going to be moving to the mid-2000s. So I think that just about covers everything I wanted to say about gold for the time being. The moving averages have, of course, crossed over the 12 and 36-month moving average. So as long as they're in a bullish alignment, that's all good as well. You can see that that was the case during the bull market in the early 2000s. So if you like this kind of analysis, do feel free to take a look at our website. We've got another 3 days before we close the $10 membership for good. So it's $10 a month, gets you access to all this kind of analysis, regular posts and podcasts and all that kind of stuff, and stock picks, the trade tracker, and so on. So you can be locked in at $10 a month and benefit from all this sort of stuff if you want to. Yeah, feel free to take a look. That's it from me for now.